Bitcoin to $250,000? Experts have some wild predictions about where crypto is headed next. From Monero's mysterious price surge to Trump's $2.5 billion Bitcoin bet, this market's got us all on the edge of our seats. Plus, learn the secret trick to picking altcoins like a pro and why now is the time to buy. Don't miss out. In the latest video from Altcoin Daily, Arthur Hayes, crypto billionaire and BitMEX co-founder, discusses his crypto investing strategy. He predicts Bitcoin could reach $250,000 by the end of the year, driven by increasing fiat liquidity and market psychology. He also believes an altcoin season is coming, but it will be more selective, favoring projects with real-world utility. He cites the MOVE Index bond market volatility as a key metric to watch, as it signals potential government intervention and money printing, which benefits Bitcoin. Hayes also emphasizes the importance of patience in crypto investing as market cycles play out over time, not on individual schedules. Hayes' Bitcoin prediction seems quite bullish, especially considering recent market trends. While increased fiat liquidity could push Bitcoin's price up, a $250,000 target seems ambitious in the short term. This point about altcoin season being more selective this time around is interesting and perhaps reflects a maturing market that's becoming less susceptible to hype. This focus on the MOVE Index and its connection to money printing is a valuable insight for macro-focused investors. In the latest video from Crypto Rover, Bitcoin hangs on a crucial support line, hinting at a major price breakout. Trump's media company plans to raise $2.5 billion for Bitcoin investments, mirroring MicroStrategy's move. BlackRock recommends a 2% Bitcoin portfolio allocation, having recently bought over $400 million in Bitcoin and $30 million in Ethereum. Crypto Rover predicts Ethereum will reach $3,100 to $3,200 soon. He suggests now is a prime time to buy altcoins, especially Ethereum, due to negative funding rates and institutional accumulation. He also mentions his successful Ethereum trade, up 20%, and encourages viewers to copy his trades or explore trading bots through links in the description. While the institutional interest in Bitcoin and Ethereum is undeniable, the market still feels somewhat cautious. The Trump media company's investment, while attention-grabbing, needs further scrutiny. MicroStrategy's Bitcoin play has been bold, but its stock price hasn't exactly mirrored Bitcoin's gains. Similarly, BlackRock's endorsement might influence some, but the overall market sentiment seems to be waiting for more concrete signals before fully diving in. It seems people are still not sure about the future of crypto. In the latest video from Lark Davis, he discusses the potential for significant growth in the crypto market within the next 6 months, tying this to Bitcoin's 4-year halving cycle and broader economic indicators. He notes that Bitcoin typically peaks 500 to 540 days after a halving event, suggesting a Q4 2025 peak. Lark acknowledges potential disruptions from the global economy, but points to Fidelity's report indicating a late-stage expansion phase in the business cycle. He mentions the ISM Manufacturing Index dipping to 48.7, signaling a slowdown, yet the S&P Global PMI jumped to 52.3, indicating improvement in business conditions. Rising production costs, however, could impact inflation and lead to higher interest rates. Lark also discusses the impact of the pro-crypto stance of the U.S. government under Trump, citing deregulation and potential Bitcoin reserve as optimistic drivers. He notes the historical trend of the S&P 500 averaging 15.92% gains in presidential inauguration years. Finally, he discusses the global M2 reaching new highs, suggesting, based on the 82-day lag, that the peak of the bull run is yet to come. He predicts a local peak of around $150,000 in July, August, or September, followed by a correction and a final rally into Q1. The correlation between the Bitcoin halving cycle and market peaks has been an interesting phenomenon. However, relying solely on historical patterns can be risky, especially in a volatile market like crypto. While the global M2 and current economic conditions offer supporting evidence, unforeseen factors can always influence market trends. It's also worth noting that Lark Davis's prediction of a $150,000 Bitcoin peak is considerably higher than many other analyst forecasts. This suggests a wide range of possible outcomes, highlighting the unpredictable nature of the crypto market. In the latest video from Coin Bureau, Monero XMR is examined. Despite delistings from exchanges and wallets, XMR's price has risen since April, possibly signaling a multi-year breakout. This video explains Monero's history, technology, and recent developments, including its privacy protocols, ring CT, stealth addresses, ring signatures, its resistance to ASIC mining thanks to the RandomX algorithm, and the upcoming hard fork featuring the full chain membership proofs FCMP upgrade. The analysis suggests a potential 2x price increase linked to XMR's correlation with Bitcoin and its use as a privacy layer. The video also addresses challenges like regulation, surveillance, and adoption hurdles due to slow transaction finalization times. It mentions XMR's potential role as private digital cash and the possibility of increased adoption in a more privacy-conscious future. The video mentions the potential 2x price target for XMR. Monero's privacy features are impressive, and its resilience against delistings is notable. However, the slow transaction times are a significant drawback in today's fast-paced world. While the potential link between XMR and Bitcoin is interesting, it needs further investigation to confirm. The regulatory landscape remains a concern, and it will be crucial to observe how governments approach privacy coins in the coming years. Monero's future growth depends heavily on how effectively they address these regulatory concerns and adoption challenges.